All right, guys. So I'm going to cover the VWAP Fib bands. Okay. When you first open up your chart, it's going to look like this. So we have to do some cleaning up. Okay. Mm. Mm. We're going to cover the settings first, and then we're just going to walk our way through. So let me zoom in some to make it better so you guys can see better. All right. When you first load it up, it's going to start on custom. Okay. This is how you control, as you can see, your signals. Your MA preset controls your signals. Okay. The signals are based on levels that break according to the direction of the moving averages. Okay. So levels that break according to the moving averages. As you can see, moving averages down below, the the slow moving average is below. So of course you get a sell signal on the VWAP, and your first take profit is the next fib, the next fib. Okay. So you keep this on custom. If you have a certain EMA moving average that you like, this is where you would do that. Okay. Let's say some people like to use the 9 and 21. You put that on 9, and we can put that on chart. And they say I like to do the 9 and 21 moving average. Okay, there you go. Let's turn off the retest signals to clean it up even more. Turn off the fast moving average. And let's say we want to turn off the slow moving average. There we go. Now we have our trend cloud giving us direction. All right, boom, here we go. 921 cross happens. Fib level is broken. Stop loss here. Take profit here. Where's your next take profit? Here. Okay, there we go. Trend cloud still pointing down. Entry here. Take profit here. That gap down smacks it. All right. Entry here. Stop loss here. Take profit here. Here. Now this is set to the daily time frame. This is multiple take profits. Jeez. Uh, Entry here. Take profit here. Entry here. Take profit here and here. Entry here. Stop loss here. Take profit here. Okay. Entry here. Take profit here. So let me explain to you when I say entry here. What you're going to do is if you get a buy signal, you are not going to enter market order. Let me tell you this. Market orders were created for the retail trader. We want to transform our mind into trading like institutional traders. Okay? So, what does that mean? We get to sell here. We queue up a sell limit order. Sell limit order there. Stop loss here. Take profit right there. Okay. There you go. That's scalping. That's how you scalp it. Same thing here. Sell happens. Limit order right here at the break. Take profit right there. And as you can see, you get filled on this candle and your take profit got hit immediately here, here, and if you would have held down to here, you got hit. You got 3 areas of take profit that got hit. 1, 2, 3. Okay. You get a buy right here, stop loss here, take profit here. Boom. Or if you want to continue to hold it, you would have got stopped out right here. Okay. Me personally, I don't like trading on this setting, but if you're a scalper, this is all you. Have fun. You already made a lot of money. Okay. Let's talk about candles you don't want to take. Candles you don't want to take. This candle right here, do not take it. Reason why is because it blew through. As you can see, there's one candle blew through 3 fibs. 1, 2, 3, well, 2 fibs. But look where it closed. It closed right here at this fib. It still blew through it. All right. This is not an entry candle you want to take. If you were to take this, if you absolutely want to take this, you're going to put your entry right here, buy limit order right here, stop loss right here. You wouldn't have got filled because this doesn't come down far enough to fill you, but it's okay. You're not chasing trades. You will not chase trades if you're going to be a part of my group. This is what we don't do. Buy. Okay. Look at this candle. Get the buy signal right here because it broke this fib and this fib. This is not a good candle to take. All right. Don't take this one. Okay. So that's how it is. Okay. Your trend cloud is going to determine where your entries are going to be. Me personally, I like to have it on the weekly time frame. This is just how I like to trade this indicator. Weekly time frame, and I have my excuse me, and I have custom set to 2, 120, set to HMA, and I'll put this on 5 minutes. Okay. Now, today was a pretty choppy day, but you still got some good trades. Entry, that's a perfect entry. Look at where the line stops. Entry. So immediately I'm placing a buy limit order. You get filled on this candle because price pushes back down. So buy limit order right there. Buy right there. And where's your take profit going to be? Your take profit is going to be the next line up. And so you measure it from here to the very next line. Boom. 28 on it. Risking 380. A 380 risk for a 2,800 reward. I'll take it. All right. It's that simple. Mm, mm, mm. And I like this because it's not going to give you that many trades, right? Look, you don't want to enter at market close. So this one right here was a banger, even though it doesn't hit take profit. If you want to use the trailing stop loss to get out, that's still, let's see, let me measure this out from here. to here. That's still, I think it's still close to $1,200. Look, weekly, trailing stop loss. Yep, still close to 1,200 right there. Oh, all right. So let's say you took this one. Okay. This candle, you don't want to take this at market order because it's too far away from your stop loss. Okay. Look at that. This candle is way too far away from where your suggested stop loss is. Do not take this. Let's just show you what it is. If you were to take this candle, price would have came back down and filled you, but you would have got stopped out at 580. The reason why you don't want to, 510. The reason why you don't want to take this up here is because look at how much now you done lost. 915. I would much rather lose 500, 510 than 900. Okay? Same exact thing right here. You got stopped out. Let's measure it out. Boom. Stopped out right there. Entry. Price pushes up to, whew, look at that. Even right there to that wick, that's still a 480 move. That's still $480. Let's say you close at the wick, you close at 500, you can be done for the day. But okay, say you did. Boom, you got stopped out right here. You lost 660. Okay. Price breaks it, breaks that same exact fib, breaks that same exact fib. You get in right here. Stop loss down here. You end up getting stopped out at 630. Let's say you held it and got out at the top. It's 1300. So the money that you lost here and here, you done made it back on this move right here. Mm, how easy. Oh, look at this. This candle, remember, look at how big this candle is. You don't want to enter market order because half of the move is already completed. And your stop loss is right here in the middle of the candle. This is not a good entry. What you want to do is, if you absolutely want to take this trade, push it down, put your stop loss, put your entry at the break. Your entries are always going to be at the break. I'm going to say that 3 times so you can write this down. Your entries are always going to be at the break of the fib. Okay? Depending on how big the candle is and where the candle closed, market orders are acceptable. Here, for example, market order is acceptable. Reason why? Because it closes right on the line. Market order, not acceptable. All right. So you're gonna put your entry right here and look what happens. If you put your entry right here at the break for the sell stop, sell limit order, right here at the break. Price comes down, retrace back up at the break. You get filled right here. Where's your take profit? Here, right here. Boom. You get filled right here. Right here. Put your stop loss right above the candle. Right above that candle close. Target right there. All right. Now let's measure it out. Sell limit order price ends up filling it right here. Stop loss right there. 280. Your risk is 280. And always remember, measure it from where you got filled. You got filled right here. So you're measuring the move. Your take profit is going to be right here. Your risk 280 for 2,700. Come on, y'all. Follow the rules and you will get paid. That's all I gotta say. All right. Fix right here. Stop loss right here. Nice little push up for a quick payday. If you would have held and pulled your stop loss up, you would have closed this position at a break even. Break even, loss, entry, banger. Entry, absolute banger. Okay. Even if you took this, put your stop loss up here. Okay. Remember I said your entry is always going to be the line. This is how you mitigate your risk. Boom. So candle broke. So limit, you get filled right here. Stop loss right there. Price pushes all the way down here. That's a what's that? That's a $900 move. Go ahead and close that trade. All right. If you continue to hold, you would have got stopped out for a $200 loss. However, the, the break happens again right here. Excuse me. So price comes down. The stop loss gets broken right here. You see stop loss gets broken right here. So now what you do, close this trade out. Close it out because your stop loss has already been broken. All right. Price breaks up. Limit order right here. You get the buy signal. Price breaks right here. Buy. Stop loss right here. Trail it up. Right. Boom. Boom. You're at break even now. Boom. Your take profit is right here where you got filled at, which is right here. Your take profit is right there. 2,100. Okay. So you continue to hold until the stop loss is broken. 3,300. Okay. I'm telling y'all, follow the rules and you will get paid. All right. That's it, man.